This is a critical week for the markets, and we need to talk about it. I am Dr. Stock, Doctor of Education, and do you know how to tell when the milk gets old? It'll start complaining that its back hurts and it's tired all the time. All right, I am over 40, so I have license to tell that joke. We're going to talk about SPY, QQQ. We're going to take a look at the economic calendar as well, and then I also want to give updates on NVIDIA, Tesla, and Apple stock in this video. So let's pop up first the trading view that we have here for SPY, and you can see the rise that we've been on, the rising wedge that we're following, and just as we touched the top of it, we started to sell back off and come back down towards this support right around 518. So we'll see what happens in the market. The most noteworthy thing about the daily chart here is this slow divergence that we have between the rise up in the market and the fact that we're still in bullish territory, but we are tapering off a little bit with the RSI. So I have to keep on watching those peaks. Let me see if I can expand this, really exaggerate the peaks that I'm seeing here. So across that peak down that way is what we're looking at, and getting back down towards this 50 is what we want to look for. I'm sorry, there we go. Back down towards this 50 is what we want to look for the RSI. So that can happen very quickly, as you see. As a matter of fact, we even started kind of narrowing down, had a really whippy moment there, and then we did not make it back to the overbought territory, but that 50 is going to be important to watch. That should we draw down near it, we could significantly bounce off of it and continue in a bullish direction, or we could possibly sell down below it. And on the charts themselves, on a technical basis to watch, we want to be watching for the stock price action that we have here for SPY to come down and test whenever its 50 comes up to meet it as well, because that could also offer a significant bounce. So we would be watching for that to happen. We could continue in a bullish direction for a while before we have any sort of sell-off, so we just want to keep on watching that. Now over to QQQ, you can see we already have broken out the rising wedge pattern. If we take a look at what's going on in big tech, everything's down, going all the way down to Netflix is the only one up out of the big tech stocks that we have, from Apple, Amazon, Google, Meta, Microsoft, NVIDIA, Netflix, and Tesla. And Netflix is the only one that is up in the pre-market hours this morning. So take a look at what we have going on for NVIDIA. For NVIDIA, we didn't reach a double top on this one. I think there's still a good possibility that we do, but we are nearing the end of the quarter, and that's really important to pay attention to, because companies will absolutely be looking for, hedge funds and institutions will be looking for a way to maintain their earnings streak that they have. So why keep a hold of these stocks that are at the top when we can dump them, buy into things that are much cheaper? Small caps might be that area where we find it. So IWM through the Russell 2000 could be that place that we see a lot of strength and possible outperformance, maybe this upcoming quarter, maybe even the quarter after that. But that is something we absolutely want to be paying attention to. So let me put up the economic calendar for you, and we will start talking about that. There we go. So Friday is Good Friday, and we have PCE, personal income and outlays. Now, mind you, Thursday is the day to be able to cash in on that. Mind you, Jerome Powell, by the way, speaking about monetary policy, over here it is, that you can look at this. It'll be on YouTube, and it's remarks on Jerome Powell. Let me see, Marketplace. There we go. Here's the headline for it, so you can see that. Remarks from Jerome Powell at the Macroeconomics and Monetary Policy Conference. So that can be influential to the following week, because the markets are closed on Good Friday, and that is absolutely worth paying attention to. That means that Thursday is that last day to cash in. So we could continue to see significant sector rotation moving on. I think the small caps, maybe some of the healthcare stocks could be where we see some of that strength coming through. I think companies like Moderna, by the way, have possibly even bottomed out, and maybe they'll see a little bit of continued strength coming out throughout the rest of the year, as they have a huge amount of products in their pipeline coming out. So that's just one example of a stock where you might see some of that come back through. So let me put the charts back up there for you. And that personal income and outlays, where PCE is involved, we might see the worried impacts of that going to the long weekend. A lot of people cashing out on Thursday, the 28th, not wanting to hold on to their options over the weekend. So we could see a lot of adjustments happening between now and then. Tesla has their deliveries on April the 2nd. And so we heard out of China, they had a 6% drop year over year with their delivery numbers. And you can see right now that they're still taking it pretty rough. 170 is where they closed last week. This week so far, we're at 168. In the pre-market hours, we have support right here at about 166. This thing could fall down to about mid-150s. We would be watching for that one. If it breaks down below this, which, mind you, we have a little bit of confluence happening between two different trend line supports on here. So we could still bounce back up to that and retest the bottom of that 165. Breaking this top trend line, because we do have a descending wedge pattern happening here. Tesla could continue to get beat up for a while, but if it breaks this top trend line that we have for resistance, we could see continued upside from there, we need to be watching for that. I think that we could have a lot of fear, uncertainty, and doubt going into those deliveries. We even might have a bad moment following those deliveries, but I think wherever that happens, wherever that line happens to be, I think we could drop before we start to rise again for Tesla. So short-term bearish on Tesla. I do think that they're going to hit their stride coming up over the next 6 to 18 months. I think would be that window frame that we would be looking for, and I will continue to dollar cost average with Tesla throughout that time. So for Apple stock, they could still see downside down to about 165. We had this big sell. We actually started breaking out. Let me put this down to the 4-hour chart for you, because you can see that we had an ascending triangle pattern here, broke out of the top of this, and then started selling off. The DOJ news hits and really put us back down. Now we're getting a bearish flag pattern on Apple, possibly pushing down through support that we have here down to that 165 level that I mentioned earlier. I think we could get a significant bounce off of that, and then we have this resistance that we have right here coming down as a trend line resist for Apple. So this is one, I think Apple's an incredible company, and with the recent sell-off that we've had for them, I started dollar cost averaging into a position on Apple, and this is one that I'll ride that wave down and then watch for them to bottom out and catch their stride and start rising back up as hedge funds and institutions start flocking to it to kind of take advantage of some of the upside that is going to be left for Apple when it does eventually bottom out. So I don't know if the bottom was in back here or if we're going to see a further bottom continue, but I do know that I have initiated a position into Apple, and it's one that I will continue to add to over time. So for this week, we have PCE coming out on Friday. We also have Jerome Powell speaking on Friday about monetary policy. So we would be listening for those two things. Now remember, all of our market opportunities happen by Thursday or next week because Friday the market's closed. So we will not have those catalysts actively affecting the market on Friday. It won't be until the market opens up on Monday following that we'll actually see something come out of that. So we're going to be watchful for that. We're going to be ready for that. This week could be a bit of a crazy week. And so we could see a little bit more of a sell coming through big tech, given its recent rise. Does it have the same upside that some of the smaller caps do and some of the other more beaten down stocks do? I don't really know that it does. So we would be watching for that to take place, because Q2, I don't know that that's where big tech continues to shine. I think we're going to find some of these smaller companies out there really start to rally throughout the second quarter, and we always have to keep our ear to the ground here to listen for rumblings that might happen on a macro scale of things for what exactly could happen to those markets, and we need to be watching the overall indices for a break down through for whenever it is that we start to correct. Maybe we've start seeing it now. Maybe we'll see it soon. Maybe it's going to take a few months from now for it to happen, but it will happen eventually. And so that's something I think that we need to be watchful of. We need to be ready for it. And that's why I have a lot of cash parked on the side for this, waiting for that correction to come through and make some of our favorite stocks just a bit cheaper than what they are. Thank you guys for watching. If you want to see my buys and sells and hear more about what I have to offer, that link for the Patreon is down in the description. If you want to learn to do technical analysis like I do, that link is also down in the description for you to find. Go ahead and check out those products and services that are available by using those links. Thanks for watching, guys. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.